The stock market is booming at the moment, and as I'm making this video, the S&P 500 has just hit a new milestone, hitting more than 6,000 points. That takes it to almost 27% up for the year in total returns, and in terms of price returns, check this out. 2024 has been one of the best performing years of all time in the first 217 trading days of the S&P 500. In fact, out of the 5 other best years this side of the century, it's currently sat at the top. And as you might have already seen, it's not just stocks that are currently back on the menu. Even cryptocurrency is back with a vengeance.
It's like you never left.
Bitcoin has been making new all-time highs, surging almost 50% in the past month, taking it way past $90,000 for the first time and taking it closer to that elusive $100,000 mark. And while we're on the subject of crypto, yes, pretty much everything else is green too, including Dog with Hat, Peanut the Squirrel, and even Dogecoin. No, I'm not kidding. The coin named after the squirrel that was put down by New York State officials was turned into a meme coin, and it's up more than 200% in a day. It's now got a market cap of $1.5 billion, which is actually not too far off the market cap of the UK's biggest pet store business, Pets at Home. Anyway, let's get serious for a second. Is this all one big stock market bubble like we had back in 2021? Or are we in a new normal where stocks just keep going to the moon? Do we still have long way to run? Or is the market going to
Bust its banks?
I'm going to give you both sides in this video, the bear case and the bull case, and then I'll give you some of my own thoughts at the end with what I'm doing with my own investments. We'll start with the negatives first, as I always like to keep the doomers happy in the comment section. First up, let's talk about the so-called Trump trade and how it's all out of control. Since the new US president was elected, the market has gone into overdrive. Since the start of November, we've seen the overall market rise by more than 5% if we use the S&P 500 as our benchmark. And then inside of that, we've had a number of very big winners taking all of the glory. Tesla, for example, is up more than 30% from the start of the month, taking its market cap above $1 trillion for the first time in more than 2 years. Elon Musk's businesses are expected to be able to fully take advantage of the fact that he endorsed the president-elect and poured millions of dollars into his campaign. The markets are betting that any possible future developments in autonomous driving, robotics, and space travel can now be made a lot smoother, especially as Trump sets alight government red tape.
I think you can see I'm having a good time. I really am.
Also, we've seen financial stocks like the big banks have also taken off. JP Morgan and Bank of America are up almost 10% so far this month with the same expectations. Now, as excited as everyone's getting looking at their portfolios every single day, these kind of market moves are all based on a future that is yet unknown. Trump has barely stepped foot in the White House, yet the stock market seems to be pricing in years' worth of gains, and this is leading to a lot of investors to want to step back and take a pause. Secondly, and sticking with the point about valuations, we're now at a point where many people are warning that the stock market is heading into a bubble again. After making consistent new all-time highs during the past year, the US stock market is in a place it's not been before. The largest stocks, which include the Magnificent Seven technology companies, now make up such a huge position in the market, it could be unsustainable. For example, you have companies like Nvidia, Google, Amazon, Meta, Microsoft, Apple, and Tesla, all close to their all-time highs. Tesla, for example, and as mentioned earlier, rose more than 30% since the US election. You can make the argument that nothing's changed about the company. They didn't produce any more vehicles, nor did they start to make any more profit. However, there is now a huge expectation that they will make enormous future profits from the new Trump presidency. This is always a big problem when stock prices get this high, as generally, higher prices today get you lower returns in the future. As another example, let me show you this that I saw over the last couple of days. Here's a chart showing the equity risk premium. It's the technical term that investors like to use that compares the earnings of a long-term bond with what you might expect to earn in the stock market. Now, don't fall asleep just yet. Basically, it's a difference between putting your money somewhere safe compared with taking the risk investing into company stocks. In a normal world, you'd expect that most people want to see greater returns when they take more risks with their money. This chart shows how over the past couple of years, the risk premium is now heading closer to zero and about to go negative. What this means is that investors are way more bullish than they've ever been before and much happier to put their money into the stock market when compared to safer bets like you would expect to see in bonds. Remember, bonds are almost like savings accounts in a way. You get a fixed rate of return and you know what you're signing up to, especially if you stick with the ones issued by reliable countries. Now, all this says to me is that there is now a huge amount of pressure that's being put on companies in the future to deliver these great returns. If the companies can live up to it, then that's great. But if they can't live up to the expectations, then a lot of people might be very disappointed. This leads me onto my final point for the bears. The hype around AI could still be a huge waste of money, with only a few companies actually benefiting from it. At the moment, you might have seen companies like Nvidia soar to be one of the most valuable companies in the world. Nvidia makes the graphics chips and data center equipment that every major company on the planet wants to buy so they can take part in the AI revolution. Nvidia's stock price has run up more than 2,700% over the past 5 years, and it's seen its revenue soar to more than $30 billion in the last quarter alone. Almost all of the other Magnificent Seven companies have spent a fortune on AI chips from Nvidia and are pouring in their cash as if there's no tomorrow in the new AI arms race. Bloomberg says that spending on AI could top $200 billion next year, and that cash has to come from somewhere. There's only so much cash that the Magnificent Seven can make before shareholders want to see a return. Remember what happened to Mark Zuckerberg's Meta stock when investors were all worried about where all the money was going being spending on VR in the metaverse went? Now, skeptics argue that the AI spend is just a huge waste of money and that profits from all of this technology spend could be many years away. You see, even if artificial intelligence is the future and you'll eventually have a personal humanoid robot doing your laundry, we still don't know which companies will end up being the ones that make it. On a side note, having a robot doing my washing and putting the food shop away would be amazing, but at the moment they can barely pour a drink and answer questions at the same time.
Are you getting tired?
It is hard being a robot when you're being controlled by a human. Anyway, that's the bear case. What about the bull case? Let's start again talking about the Trump trade, because it's not all speculation and the market is pricing in some big changes to the way the US is about to get working.
And when you're a star, they let you do it. You can do anything.
Trump has promised some big tax cuts, both for consumers and businesses, similar to what he'd put in place when he was last in office. Back in 2017, he cut corporation tax from 35% to 21%, giving some major breaks for some of the country's largest companies. For example, companies like Verizon, Walmart, Intel, Disney, and Visa were able to save billions of dollars from their tax bill. Now, you don't have to be a genius to work out that if companies make more profit and keep more of their money, they become more valuable. Right now, you can argue that the market is pricing in a lot of future growth with the expectations that companies will be paying less of their profits in corporation tax. Likewise, you can also make the case that if tax cuts are also done for regular consumers, then they will have more money in their pockets. This extra money can then be spent in the economy, and we know there's nothing better than American consumers love to do than spend, spend, spend. So you see, it can be a double whammy effect on the economy, not to mention the fact that you have Elon Musk appointed to the so-called Department of Government Efficiency with the goal to slim down the government and take apart regulations. We're definitely not living in a simulation. Those words did just leave my mouth. Now, just to add to the Trump trade point, you can see that almost all assets are shooting up in value, including the crypto market. Bitcoin is also seeing a huge resurgence as Trump has pledged to make the US the home of cryptocurrency and even suggested adding Bitcoin to the US strategic reserve. If this were to happen, then anything is possible for the gold digital coin, as right now it's getting close to breaking $100,000. I bring this part up because other assets like physical gold have seen a reduction in their price, suggesting that investors are much happy to take risks in the stock market. This isn't just one part of the market going up, it's much wider spread, and it's more than just one type of asset. Next up, let me just tackle company earnings to counter the point that I made from the bear case. For those people calling the market overvalued, you may be right, but let's also look at how much profit today's companies are making to see if there's more to it than that. If I grab the latest report from JP Morgan, who look at the profit margins of the companies in the S&P 500 from the last 20 years, you can see how they're almost at the highest point they've ever been. If profits are high and companies are making a lot of money, would you expect the prices of stocks to be high? Well, I know I would. Likewise, if the expectation is high for companies to make a ton of money in the future and even higher profits, then I would also expect to see prices high on the stock market. High prices always look scary, but then there's no real way to know if they are high unless we know the future. We're only comparing them to the past, which is not a reliable way to predict any kind of stock market moves. Let me also bring up another point while we're talking about valuations and potential stock market bubbles. Here on screen now is the amount of company IPOs over the last 24 years, going all the way back to the year 2000. As you can see, in 2021, we had a record 1,035 company IPOs, many of which were taken public by SPACs. This was when interest rates were super low, The market was going crazy and everyone wanted a piece of stocks, no matter whether they made a profit or not. Come down to 2024 and you can now see that we're down to normal levels with nothing weird to report. I'd argue here that the market is a lot more cautious than it was back in 2021, and the companies with the greatest rise in share prices are those who are also backing it up with real cash and real profits. Now, the big question will always be, can they live up to those expectations in the future? That is something nobody knows, but there's certainly a lot of optimism about what's ahead. And this leads me on to my final bull point. We're entering a new age of potential growth in the world with new technology that could revolutionize the way we work, have fun, and even get served drinks. Looking back at the past can teach us a lot of lessons, and I'm always sharing those lessons on this channel, but when it comes to what the future might hold, it's anyone's guess. There's a good reason that disclaimers in the financial world always say past performance is not a reliable indicator for future returns. And that not only applies in a negative way, but it can also apply in a positive way too. There's no saying that we can't be entering a new age of AI, robotics, and automation that will create companies far more profitable than we've ever seen before. If we can create tools to better help with people's jobs, then we can make people more productive, and then this added productivity helps countries grow.
What do you like to drink? Water.
This could be like going from manual labour to the Industrial Revolution. Anything is possible. Not far from me in Manchester, the Industrial Revolution turned a once small town into a production machine, with imported cotton being processed inside giant mills. The population turned from 10,000 to more than 300,000 in a relatively short period of time. Now, it wasn't all rosy and there were plenty of speed bumps in the road, but it's a good reminder that change can happen and it's not as easily predictable as most people might think. I'd never try and predict the stock market, but it's worth saying that anything really is possible. So what should you make of all of this, and what do we do as investors? If you're brand new to investing and not started yet, my answer will always remain the same, no matter the day. It is always a good time to get started investing if you are a long-term investor. On that note, as a reminder, I leave the links in the description to the platforms that I use to invest. If you want to open a Stocks and Shares ISA, you can get yourself some free shares or cash once you sign up and deposit. Anyway, right now you can easily make the argument that the market is overvalued and stocks are too expensive, and I can see how that makes some people very uncomfortable to invest their money. You might decide to wait things out, hold more cash, or even just buy some shiny things like gold. However, let me just remind you that there will always be plenty of reasons not to invest. And this pattern has repeated itself year after year. If you told me at the start of this year that the stock market would be on track to having one of its best years, I would have not believed you, especially after having a good one in 2023. But exactly this has happened, and there are sadly plenty of people who've been sat on the sidelines waiting for a crash and calling for one for many years. I don't spend a second of my day worrying about the price of the stock market, and I honestly think if you can get to a place like that, you'll have a much better time as an investor. Now, sure, not every market is up when I talk about the stock market. I'm focused on the US market, the biggest stock market in the world here. However, it's not all the same elsewhere. Chinese stocks, UK stocks, and even some European stocks are not keeping up. The FTSE 100 here in the UK is not keeping up with its US counterpart, and it's still a long way off from making any all-time highs that were last set back in May. I'll let the market decide which companies and countries are worth investing in. For me, I'll be sticking with investing into all of them using good old index funds and ETFs. Even if the stock market doesn't perform well next year, and even if the stock market falls by 10, 20 or 30%, my strategy is not going to be changing. It sounds crazy, but it works in the long term, and I've made a load of videos on my channel explaining exactly why it works in the long run. Anyway, let me know what you'll be doing. If you disagree, I definitely want to hear from you in the comment section. Now, if you want to make sure that you know how to use the most powerful investing account you can use, here's a guide to Stocks and Shares ISAs updated for this year. I'll see you in the next video. Happy investing.